All right, Rupal Bhansali is joining us now. She's Chief Investment Officer, International and Global Equities at Ariel Investments. Rupal, it's always a pleasure to have you on the channel. Great to have you on the program. Appreciate your time. Prashant this side. Rupal, we've had a very decent bounce in both the US, but more so here in India. How is the global environment looking as we are entering the last lap of 2022 as we enter 2023 now?
Well, thank you for having me. And first of all, congratulations on 23 years of excellent reporting on market news. It's really a great thing to celebrate. So thanks for having me on today. In terms of the global market, I think that there's a bit of a distraction in terms of the Fed dot plot. Everybody's focused on rate change. I would argue people should focus on regime change, which is not just how much the Fed is going to raise rates and where inflation is going to peak, which of course is important. But I think the larger challenge for the markets, the US in particular, but that's going to spread internationally, is this regime change from quantitative easing to quantitative tightening. The implication of that is that risk assets get repriced across the spectrum, and equities are a risk asset. And so I'm expecting a very challenging year for US equities in particular. And because the US accounts for 62% of the global benchmark, it tends to drive and exert a gravitational pull on all markets around the world. And from that standpoint, I'm quite bearish.
Okay, quite bearish, and it's a challenging year for US equities. Rupal, good morning and thank you for your lovely wishes. I had a chance to, go through your book, Non-Consensus Investing, and I must say it's a fabulous piece, so congratulations on that. You have had almost 25 years of experience and you've tried to sort of, consolidate that in the book. But just tell us from an investor standpoint, an Indian investor standpoint who's watching you right now, amidst all of this talk of perhaps a global recession, India has been very resilient and, continues to hit new highs. Do you think that could be the trajectory over the next, year as well?
So I'm very bullish on India long term, but I think in the very short term, there are some headwinds that India has to reckon with. In particular, the inflation problem in the world has become an inflation problem for India, and especially for foreign investors, because the current account deficit, due to the high import bill, hurts the currency disproportionately. And so I think that's going to be a headwind. The other headwind is that, corporate capital expenditures and infrastructure spending by the government has been quite elevated for the last couple of years, and that's underpinned GDP growth in India, which is why it's sort of decoupled and the markets performed very well. But I think it's going to be very hard for that to sustain in the very short term. Now, but in the medium to long term, I think there are some secular forces that are actually very bullish for India. Deglobalization, which is a big source of risk for many markets around the world, is actually a source of an opportunity for India if it chooses to seize it. And I think the government is looking to seize it, and I hope that entrepreneurs look to seize it because there's going to be a great deal of relocation of manufacturing capacity and outsourcing away from single countries like China. And I think India is going to be the beneficiary. Now, the logistics reform package, an initiative that the government has announced, I think is a very key part of it. But I think to a certain extent, labor market reform will also be required to allow people to have confidence to invest in factories at scale with hundreds of thousands of workers like you have it in China. But I think medium to long term, India can be a huge beneficiary of these secular trends. Short term, I'm afraid I don't have the same message. But I think most investors should be long term. So there's good news from that standpoint.
Well, that's right. Rupal, we have an equity cult that's developing here in India, and that would be music to their ears, and the longer term India is standing out. But Rupal, I wanted to ask you, earlier this year, in the middle of 2022, we saw global equity markets see a correction, and we bounced off those levels. Now, the fear is 2023 is not going to be such a great year. Do you think we revisit those lows at some point of time?
Yes, I have a very strong view on this because I research companies and stock markets for a living, about 50 countries all over the world. And clearly the US is a very big piece of that puzzle. And I will tell you that, from every vector, whether it's growth rates, whether it is corporate profit margins, whether it's tax rates, whether it's reinvestment programs, on every level, the corporate sector is going to be quite challenged. And remember one thing if real estate is about location, 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 equity markets are about earnings, earnings, earnings. And earnings, consensus earnings expectation for 2023 in the US market certainly are very high and need to come down. So I think all of that, and when earnings come down, multiples tend to come down. Just as a reminder, when there was the tech wreck, the bubble burst in 2000 to 2002, the NASDAQ corrected 78% over that 3-year period. However, on its way down 78%, it had 20% plus bear market rallies. So I think the most recent rally that we've seen, especially in this quarter in November, is one of those head fake rallies where the market seems to be a bit of on a sugar high, thinking that the Fed is going to at least slow down and not be so aggressive. I think that's a premature verdict. And as I mentioned, it's not about the rate change, it's about the regime change, which is going to be with us for a multi-year, if not almost a decade-long period.
But why should there be a regime change, Rupal? I mean, what's the core reason for that? Why won't they flip back to the earlier era of lower interest rates and keeping everything on an even keel, so as to speak?
The Fed is very clear. They're going from quantitative easing to quantitative tightening. That's the regime change I'm talking about, which is a withdrawal of money, monetary stimulus has been...
Sorry, apologies. Once they achieve interest rates to near about where they want them to be, why wouldn't they start easing by the end of 23 again? That's my question.
Oh, I'm sorry. So I think the reason I'm calling it a premature verdict that they would start easing again is because in the history of inflation coming under control, you've never had it come under control till real rates, i.e. the normal interest rate is at least a couple of 100 basis points above inflation. And nobody is predicting inflation to go below 4% next year, not even the Fed. It's a journey on the way to 2%. And I think that that's going to be an extremely hard hurdle to reach, given the labor shortages that the US market is facing. So this is an expectation. It is a hope. I don't think it will translate into a reality that the Fed actually will have the wherewithal because inflation is unlikely to come under control that quickly.
Just one final question. Since you are bullish on India for the longer term, if someone is trying to sort of, build a portfolio for the new year, the best strategy in the last 1 year has been to go long on banks and short on IT in the Indian markets. What do you think the strategy should be in 2023?
I think a bird in hand is worth more than two in the bush. Whenever you have capital depreciation instead of appreciation in the markets, dividends tend to play a far bigger role in generating total returns. So across the spectrum, dividend yielding companies, especially the ones that have an above average dividend yield, which can sustain themselves on a low payout ratio. So again, I'm not talking about a head fake high dividend yield, but something that's good enough and yet will give you growth over time as well in terms of dividends, is generally proved the best strategy all over the world whenever markets are facing pressure. History has shown that.
Okay, so stick with high dividend yielding stocks amidst all this uncertainty. Rupal, always a pleasure speaking with you. Thanks a lot for joining in and being a part of CNBC-TV18 celebrations. It's our 23rd birthday today, so it's a special day for all of us here on the channel. Thanks a lot for tuning in.
Thanks for having me. Bye-bye.
Okay, that is Rupal Bhansali talking about the possibility of a recession coming through globally. But for India, she likes the Indian markets long term. But like we've been telling you, it is celebration time here on the channel. We turned 23 today and we have lots planned for you. We're coming to you live from the National Stock Exchange this morning.